I think that's just profit-taking. You think that gold's been under pressure, or a lot of profit-taking, believe it or not, over the last 4 or 5 days. So when you see such a move of such magnitude in the US, Asia tends to take a little bit of a rest. So when you look at it, I think it's just, once again, profit-taking. Let's see how the market settles down. And if we stay above 12.20, then I think it's quite supportive for the price to continue to march higher.
We tend to think of gold as sort of the safe haven, and following the Fed's move, there does seem to be a little more appetite for risk. Yeah. Do you think that gold will continue to climb despite that?
I hope so. I'm a regular gold bull. So I'm always a buy on dip type of person. But I think it's interesting when you look at Yellen's statements, you know, the inflation rate, the pressures, the price pressures to the top side. Although we're still around or under that 2%, which is the Fed's benchmark, you get a sense that with low commodity prices for such a long time, you have this ability for price pressures to increase quite dramatically. And I think that's what Yellen's on about in terms of, you know, saying, OK, that inflation is there. If that inflation starts to spike, the market's saying, well, let's go back to gold. Gold is an inflation fighter. Gold, the US dollar comes under pressure. Gold. So when you look at all the attributes as to why you would buy gold, it's starting to look a lot better.
So 12.20 is the key number there?
I think 12.20 is now. It used to be about that 11.70, but because we've had this significant impulsive move to the top side, people will use that as a level of support. So I think you'll find investors will look to buy. If it breaks below that 12.20, then you'll think people have to reassess the situation.
We were talking about this earlier. While we've seen gold make huge moves, silver just hasn't moved at all. Why?
Yeah, it's a dog. It just hasn't moved. I think it's an overhang of supply that we've always had on the market for silver. But if you really look at the ratio between gold and silver, if there's an appetite for precious metals, then silver is the underdog. It creates that support, and some very, very good support for silver as well. So if we do get that increased momentum into precious metals, then I think you'll find you'll have a relatively solid rise in silver. In my mind, that's the better value of the two commodities at the moment.
Okay, if we're going to shift gears a bit from precious metals, speaking of coal, because Peabody Energy today coming out and saying there are financial troubles ahead, essentially. This isn't anything new with coal. We've certainly seen it struggling. Where does it go from here when you consider the demand has been dropping over the years?
Look, I guess it all rests with stimulus and the amount of stimulus we put into the markets as to whether or not that demand will pick up. It's a similar story we've had with iron ore in terms of that supply. So I guess you've got to see the economies start to pick up. And if the economies start to pick up, then you'll see that supply. You'll see the market change, a change from a buyer's market, which it has been for such a long time, to a seller's market. And I don't think we really appreciate the speed these days as to how that can happen and how quickly that can happen. Because at the moment, it is still a buyer's market, but if that demand picks up, you will find that that supply will dry up quickly and the price will move up quite dramatically, as we saw in iron ore only about a month ago.
Well, I was going to ask you that. I mean, you speak of dramatic shifts that we've seen. Iron ore is certainly one of them. If you have it, I mean, how do you trade that right now?
Look, I think at the end of the day, you take that view that the economies are picking up. You take that view that the stimulus will take time. Remember, the stimulus that we've actually seen China put to bed does take time. I have been a little bit upset with the seasonal buying, and that does worry me, because this is this time in China where we should actually be seeing more demand for iron ore, and to see it come off gives me a little bit of concern. But at the end of the day, I think you'll find that infrastructure need for iron ore will continue to support the price. So iron ore, I think, is still a buy and dip.